Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today we'll take a look at the Great British Pound, because the Great British Pound right now shows the best signs, the most bright signs of the bearish pressure and the possible downward breakout. These signs are not as clear on the euro currency, on some other currencies as on the Great British Pound. That's why today we'll take a look at the cable. Also guys, we haven't taken a look at it since 13th of March probably, so some time has passed since then, and currently we also update our view on the Great British Pound. It could be curious a bit, but the setup that we have discussed yesterday on New Zealand dollar hasn't fell under pressure of the comments from the Fed. So you probably know that the two officials of the Fed have said that there is almost the 100% probability that Fed will raise rates till the end of the year. That has led to the significant drop across the board among all assets, including the euro currency, the gold, crude oil, and others. But the reaction on the New Zealand dollar was a bit not as strong as among other currencies. So as you can see that on the New Zealand dollar, even market was able to hold inside of the small swing that we have discussed. Is an area where we should think about taking the long position. That's why it's interesting, and maybe New Zealand dollar even will be able to show some upward continuation. But right now, we have to say at the same time that the bearish pressure has increased very significantly. So, on the daily chart of the Great British Pound, if you remember, we have discussed the range of this candle. And we said that when the market forms the very wide, very significant range during the one session, when we have big range candle, usually it holds the following price action for the long period. And you can see the market stands almost 3 weeks inside of this range. At the same time, this range starts to work as the possible directional indicator. And how it works, that the top and the bottom of this range start to work as the possible direction of the following action. So if market will break through the top of this candle, such sort of the candle, usually market continues action in the same direction. The same is true for the downward breakout. If market will take it out of these lows, this downward action probably will be to the downside, because the market mechanics beyond of this standing inside of the range is that the mental process, that is period of the thinking of the market, of the investors, what to do. And since investors here have a lot of time to think, so market is calling inside of this range. When the market takes the direction, it means that will be the solution of the investors, and that's why market usually continues action in the direction of the breakout, because investors takes the solution not when the breakout is happening, but when market already is starting action to the point. That's why the wide range candles works in such manner. So beyond of this candle, we have other signs of weakness of the market. So we can see that market wasn't able to pass through this resistance. That is, in fact, the former lows. So market has tested it and moved down and stands in the range of this candle. Second moment that we have here is the bearish dynamic pressure. So we can see that market has shift trend bullish, but continue to form lower highs, and it doesn't show any signs of the upward action. That tells that this is the bearish dynamic pressure, and bearish dynamic pressure suggests the taking out of these lows. Since we already could recognize the shape of the possible butterfly, that stands in the very tight agreement between the bearish pressure and appearing of the possible downside downward butterfly. Target approximately around 144, 80, 145. This is very similar to the situation that we have in the euro currency. Recall what we have discussed on the possible pattern that market could start the reaction on the daily, on the monthly oversold and monthly support. Recall this discussion. Recall what we have said. That could become, if market won't be able to hold above this low, that's your currency chart. It could, and break through it, the chance of appearing of this butterfly will increase. Right? But on the Great British Pound, this butterfly takes more clear shape and could be better recognized. That is what we have on the daily chart. On the 4-hour time frame chart, we have some other signs. I don't know, do you remember what we have discussed in our recent weekly research on the Great British Pound on 30 of the March, the last day of the March. But take a look. We have this A, B, C bottom pattern, and market wasn't able even to reach the minor extension, 618. So a lot of attempts have happened here, but every time market has failed. Second moment, market has failed to pass through the monthly pivot point, and it means the monthly sentiment stands bearish. This market wasn't able to move through it. That yellow line, this gold line, is the monthly pivot point. Concerning weekly pivot point, you also could see that market has moved below it, and right now just held by the weekly pivot support one. And finally, yes, we have also here some bearish divergence, but it's not really important. And finally, what is really important is that take a look. That was the former flag pattern that we said as market has target here and hasn't completed it yet. We have the thrusting action here. That's gradual retracement. We should be ready for further upward continuation, and probable target, minimum target will be 150.20 area. Finally, we've got this breakout. This has happened here, but take a look what has happened next. Retesting of the trend line and returning right back down. It means that that was the failure breakout on the flag, and this is the bearish sign, and it means that it's really high probability that the downward breakout of the same flag will happen. So market first will return it back down to this border that stands approximately at the lows, and after that the downward breakout will happen. We already have seen this on the gold market. Recall our bearish trap. Jack Schwager calls us as the bearish trap. When the market forms bearish flag, shows at the first glance the correct downward breakout, but very soon return it back up and in the body of the flag, and that calls us the bearish trap. And in most cases, it leads to opposite breakout and further acceleration in opposite direction. The same here, the same situation we have here, but here we have not bearish but bullish trap. Upper breakout on the consolidation that could be treated as the flag. So if you can track charts on the daily chart, this probably could be look as the flag pattern, right? For example, here, upper breakout failure, return it back down. So it means that market has very big chances on the downward continuation. So you can see on the Great British Pound these signs of the weakness. The bearish strength looks just much clearer than on other currencies. That's why today we have taken a look at in the cable. So let's see how the situation will develop, and probably tomorrow or the next week we start to think about taking the short position, especially on the euro currency, if market will taking out the lows that will confirm the failure of the bullish setup, and it's confirmed that we could start to search chances for possessing in accordance to this big butterfly that's forming as on the cable right here, as in the euro currency.